The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody, and happy Monday. Quite a market we got going on, man. It's going to be an eventful Monday. Can you recall that we have CPI going on tomorrow morning? Not really getting talked about this morning. The Fed, the Treasury, they come in last night. They guarantee all deposits for Silicon Valley Bank. And the market isn't quite sure that that's contained everything yet, folks. We'll jump into it. But, boy, you talk about some price action in the markets. Let's jump over to the S&Ps. Right now, you're down by 33 points. We're catching quite a bid right now. You were as low as 38.39. 38.39, folks, below Friday's low. Below Friday's low, right? And that is, remarkably, you're talking about 130 points from where the S&Ps were trading at 3 in the morning. Folks, that's more than a 3% drop you just got from where this index was trading at when Europe opened. Watch out in this market, man. Keep things in context, folks. We're still trading near 3,800. The market was pushing 4,000 just 8 hours ago. Meanwhile, we got lows at 3,500 in this market in October. Wall Street has no idea what the Fed is going to do 9 days from right now, folks. Goldman Sachs is talking about a pause. I think JP Morgan is talking about 25 basis points. And then I think I saw a note as I was coming on the air talking about Citi saying, hey, 50 basis points is still in play. Rates, yields this morning, let's go through it all. S&P is negative by 33. You see the price action. You know what? We're going to pause a little bit. Let's go back to the hourly. I'm going to take this longer term chart off here. I'm going to talk about the acceleration we had last week. Monday's action last week, folks, right into the 618 of the move lower from 41.86 down to a low of about 39.30. We make it up to the price point of about 4,080. Now, what's remarkable here is if you get an A to B, your A point 41.86, 41.75, your B point somewhere around 39.25, your C point somewhere up there around 4,075, puts you in the ballpark of about 38.30. 38.25. We almost got there this morning. And what's interesting about the S&Ps, that area, all it is it's testing the lows that we were at earlier this year. You break below that price level, you're down to 3,600, at least 37. I'd say 3,600. 38.25 is the next stop. We're at 38.67. And then below that, you're talking about 3,500. If everything was contained, folks, you wouldn't have the market reacting like it is this morning. NASDAQ 100, we're negative by 55 points. You also wouldn't have I'm getting calls everywhere. You also wouldn't have rates doing what they're doing. You also wouldn't have Wall Street so confused over where the Fed was going if this was a one-off event. That's where I was very remarkable talking about with my friends this morning, right? Not exactly in finance, but successful individuals in business in their own right. Everybody was talking about this. I have a friend in the Boston area, okay? For you Boston citizens, fine citizens of Boston out there. They are a member of a country club. Their country club had their money tied up with Silicon Valley Bank. It probably came from when Silicon Valley Bank bought, what was the Boston Enterprise? It was something. Took over those accounts. Nonetheless, you had a country club up there, right? My friend out there last night, he's exclaiming. He's happy. He gets to continue golfing. Amazing how this reverberated, where you could see people, even a bank like Silicon Valley Bank, right, that's banking in startups in Boston. They had taken over one entity there, so they had a presence, and they had $200 billion in assets. So, you know, friends of friends, if you have people in any type of business, folks, I have friends in marketing in New York, right? They have very good friends, acquaintances that they've worked with in marketings on startups that, had their money tied up there. It just reverberated pretty quickly, and I'm not so sure this stems the tide. The Dow off 225 right now. Bitcoin up $2,400 right now. We got crude pushing the lower boundary point of its range. Check out crude on a daily basis, right? Back to about 72.90. We just spiked to a low this morning of 72.30. Pretty much the lower boundary line of where we've been. Maybe we get into the 60s in crude this morning. We'll see. Down 372. People piling into gold this morning above 1900. Look at that run, man. Gold up $35 right now, trading at 1902. And boy, you talk about yields, man. We were talking about this trend line, folks. Doesn't get more decisive than this, man. I'm not sure what it says, but you cannot deny what has happened on this trend line. Okay, you come back, you test the channel line, and you slam out of this thing. We got higher price. We got lower yield. You got the 2-year. The 2-year just went from 5% to 4% in the blink of an eye over the period of about a couple days. Jump to the 2-year. There's your 2-year action, man. You want to see some wild stuff? Put these charts on hourlies, folks. Right? The 2-year from 101.9 to 103.15 in a heartbeat. You check out the 10-year. You drive from a price point on, what is that? Thursday morning of 110.22. We just pushed 115.13. Almost 5 full points on the 10-year. The 30-year just traded from 124 and change to 132 and change. Some of the numbers they're talking about on Bloomberg this morning, folks, in terms of the implied rate, maybe it's 4.7 by some of these numbers. They're talking about cuts in the later part of this year. I mean, what happens, okay? And not to like just be screaming alarm bells, but inflation is not something that's been raging because of bank wages. It's raging because of services. Okay, it's raging because of wages across the country. Now, yes, any type of scare like this is going to put some type of a drain on the economy. Okay, it is going to be a negative for inflation to some degree. But folks, just a week ago, you heard Chairman Powell. 6 days ago, on Tuesday, it was his first day of testifying in front of Congress, was the day he surprised the market, said we're going to be higher than we expect. Now, things have changed. Okay, it'd been quite a different story if he was in front of Congress this week, but inflation hasn't been quelled just because we have a little bit of a banking crisis going on in these markets. So what happens if the Fed's in a little bit harder spot than we thought, right? The whole rhetoric leading up to this over the last year has been that the U.S. is in a great position. It has allowed us to raise rates at a faster pace than Europe. Our economy can handle it. We can squash inflation. Europe's in big trouble, right? Because they don't have the type of room that we do. They're dealing with an energy crisis because of the war. Well, maybe that's not the case. And maybe things are a little bit more dicey than we may have imagined. And boy, if you ever get like a pause, man, now going 50 after a bank scare, when I imagine that things are still a little bit dicey, yeah, I can understand why that's going to tilt things potentially to 25 basis points. But boy, if they go pause, okay, if they go pause a week from tomorrow, folks, now we're going to get CPI data tomorrow. Absolutely amazing in terms of the market, the economic data we're getting. How's that going to react, right? What if we get a super hot CPI data point, and meanwhile, the Fed's now worried to raise rates because the banking sector is teetering, okay? And listen, there is a distinct difference between the banks that have been stress tested, the big banks, and the regional banks. But boy, these arguments, folks, against regulation, and that's the bummer of it all, right? Everybody hates regulation until you find out you needed it, okay? And the numbers that are going on, I mean, Silicon Valley Bank for the longest time argued that they were not like most banks, okay? They made these cases to regulators over and over and over. You got regional banks that have made those cases over and over and over. And it turns out that's not the case. They are systematic. If they weren't systematic, they'd be allowed to fail. They're not allowed to fail, okay? And we're going to find out on this open, man. It's going to be a wild day. We're going to talk about it all, folks. Stay tuned. We got how many? 15 minutes until the opening bell. S&P is negative by 30. Markets in the red. We got a lot to talk about on this Monday, folks. Stay tuned. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got markets in red territory. A couple of the banks, man. The run is on, folks. I mean, I'm still seeing pictures posted this morning in the Tiger's Den, I believe it was. Yeah, I'm seeing them everywhere. My group chat going on. I think it was a bank somewhere around Boston. Was that Silicon Valley Bank? I saw somebody post, I think, around Boston somewhere in there. Let me scroll up. Yes, it was. Man, Peter from Park City. Silicon Valley Bank branch in Massachusetts. Yeah, people are still lining up. Yeah, get your money out no matter what, man. Because if it becomes a little bit bigger than everybody may think, it's going to be a little bit more difficult for the Fed to backstop everything like they're saying that they've done right now. President Biden was on the air practically when my show began, was listening to him for a couple minutes. Probably not going to be anything market changing in that news over there. But boy, you talk about some of the runs, folks. Now, that's Pac West. Okay, that's this morning. That's an hourly chart. Let's put it on a 5-minute chart, man. You see the action, folks, okay? What's going on in terms of the action last night? Had this thing up to $14. At 4:30 in the morning, this thing was flat. No, that's not happening. This thing just traded down $5 from 12 to 7. First Republic, what's the first? They're down like 60%. I got an article pulled up for them this morning. There it is. First Republic shares. What's their symbol? Let's see. First FRC? FRC, yes it is. Let's jump over to that share. First Republic down from $80 to $30. We were just at 20. Okay, so everything has not been backstopped yet. The news last night, Signature, they are closed as well. And boy, some of the information, right, that we're all getting, it's kind of like hindsight. It's like, geez, how did everybody know that all of these losses? I mean, if you're a bank analyst or something like that, I mean, to the gentleman that was out there tweeting in January, right? Have you guys seen the short seller out there kind of just talking about this case that the hold to maturity securities that Silicon Valley Bank had on their balance sheet had such substantial losses that if you'd applied it to their balance sheet, it would actually make them bankrupt already, let alone if you ever got a run on the bank that had them tap some of those areas. What do we got? Western Alliance Corp. What are they? Let's pull up their symbol. WAL. Yeah, down from 50 to 15 bucks, man. Watch out in this market. And I agree. The reason why this happened, folks, is because, yes, the depositors of Silicon Valley Bank have been made whole. Would you really be waiting if you had over $250,000 to get your money out of any bank that's potentially beyond a big Wall Street bank? You should get your money out of there. If you got over the $250,000, folks, and that's not a bank that could be deemed systematic, get your money out of there, because there's no reason why it can't fail. And you only got $250,000 of insurance, man. There's an article, I think it was from the Journal. Is this the one? Nope. All right, I'll pull it up. It was an opinion piece. And it was talking about the moral hazard of things. And, to some degree, folks, right? To some degree, because I get it. It's a very different scenario. Depositors versus the owners of the shares and bondholders, okay, of the equity holders of that company. But here's the thing to remember is that, you have a company like Roku, after the close of business on Friday, reveals that they have almost $500 million sitting with this company. Okay, I was talking to my dad over the weekend. Silicon Valley Bank, folks, has 60 million shares outstanding, 60. If they're trading at $100, the company's worth $6 billion, okay, which is where it closed out at the end of the day Thursday. So that company was only worth $6 billion at the end of the close Thursday. Now, everybody tried to already get their money out Thursday, okay? So Wednesday it was trading at $275. So you're talking about a company that's valued at above, what, $16 billion, $17 billion, okay? And that's well off the $700 high that it had where it was pushing $30 or $40 billion market cap. Those are the numbers you're going to hear for this equity, okay? But this is also a company that came into the pandemic at a price point of about $200 at the end of 2019. That puts this as a $12 billion business. Now, just how you recalibrate your brain for a second, that's a $12 billion for-profit business. Okay, the banking industry in America is not socialized. Okay, the banking industry in America is a privatized business. Okay, it is a private business owned by private businesses with shareholders that are regulated to a certain degree. Very different. Now, when you hand a company $500 million like Roku does, you're making a financial transaction between two businesses for the best purposes of both of those businesses, okay? And there was a distinct reason why Roku was making this financial decision for the betterment of their shareholders. It's just bananas, folks, that any company, if you had $500 million and you're doing a financial transaction with another business and that business is valued at about $10 billion, would you ever give that company $500 million and just expect that that $10 billion business is going to be around and make sure that they don't have to ever, that your $500 million isn't ever at risk? You would never do that. And for some reason, the banking industry, and maybe that's the case, and maybe that's why it does have to change in terms of regulations, because it seems like the onslaught is on. Now, this is a big bank, man, $200 billion, okay? I get the difference. But it seems like the onslaught is on. And what you have happening is you have actors in the market that made the right decisions, okay? Maybe they sacrificed a small amount of yield. Maybe they sacrificed a small amount of agility. Maybe they sacrificed being able to work with only one banker when they wanted to, okay? They made sacrifices to make the right decisions for themselves, and they protected themselves, and the people that didn't, it didn't matter. They got their money back. I'm not arguing that everybody loses their money, but if that's the way you want things, then there needs to be greater regulation, because so often we have Congress, okay, and we had members of Congress, okay, last week talking about Chairman Powell with the capital requirements on regional banks, local banks, and how their local banks are the lifeblood of a local economy, right? Making these cases to the chairman about you got to differentiate the big banks versus the local banks. You can't bring down the hammer on the local banks. Folks, you can't have both ways, okay? Now, let's look at some of the numbers that we're talking about here in terms of what the Fed comes in with. Let's get these numbers, man. Talking about the rate bets and how everything is changing. Okay, so 2-year Treasury yields. Yeah, this article, let's see, that's 6 o'clock last night. Let's see if they update this, man, because we got to do some updating, because we're talking about numbers on the 2-year that are below. Good, we got an update at 9:21 a.m. this morning. Yeah, they're going to have to update this thing every 5 minutes, man. The 2-year yields plunged as much as 51 basis points to less than 4.08. Yeah, I think we got below 4, which is why they're just tweaking this article gently as it changes ever so slightly. Steepest 3-day decline since Black Monday of October 1987, as traders bet the collapse of SVB and 2 other lenders will compel the Fed to halt rate hikes. Which one is it? That's what's so interesting to me this morning, is which one is it? Is this a systematic problem that is a severe concern for the Federal Reserve that it could spread everywhere? Or is it a one-off bank that's a Silicon Valley bank with fickle depositors that are very, very wealthy and have huge sums of money in there that are not protected? I don't know, but they're kind of playing both ways. If we ever get pauses on the rates, folks, I don't think that the banking crisis, well, we're going to find out, man. So check this out, right? The Fed terminal rate just dropped like 75 basis points. Yeah, 75 basis points is what it dropped. We could almost be seeing cuts in terms of what they're talking about. And as we talked about it, you got First Republic down big. You got PacWest down big. And we are how many points? We're about 100 points from where we were at last night. Stay tuned, folks. You don't get many interesting opens like this one. We're going to be coming back for the opening bell in 3 minutes.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the markets down 44 points right now. And I do not subscribe to CNBC Pro. Listen, I pull CNBC up for some just fact headlines that hit things. And I do not even advise you to subscribe to the Pro because there's just so many better news sources out there than CNBC, in my opinion. Bloomberg, Wall Street Journal, New York Times Business, many. Nonetheless, you got to check out this headline, man. You got to pay for this type of access, folks. Davidson upgrades PacWest shares to buy as the bank stock continues to crater another 37%. I mean, if you like, is it PacW? Is that what it is? Yeah, you're down 35% to $8 right now. S&P is down about 41. First Republic down 65% right now, and it's not just the regionals. I mean, they're down 65, but you got JP Morgan down 2%. I mean, I guess that's with the market. Bank of America down almost 5% right now. Wells Fargo down almost 5% right now. Wells Fargo down 4.4% right now. Let's check out how the big dogs are trading on the open right now. Apple shares. Apple, probably a little bit of a safe haven, right? Up 0.4% right now. Amazon shares down about 0.8% right now. Microsoft shares down 0.4% right now. What do we got? Google. Walmart's flat. Target's down about 0.8%. All right. Yeah. Okay, let's jump into some of the takes here. Yeah, boy, there's almost so much to talk about here. It's not almost, there definitely is. Yeah. Okay. Forgive me while I jump around for a bit. So you have Ackman out here over the weekend who was pushing pretty hard on Twitter, about as hard as you can. And here's the only thing I want to say is that I found this tweet most amusing. Of course he has ventures in there right away. He's out there saying that depositors have to be made whole. Of course he is. He's arguing his own book, folks, because he's got tons of money tied up there. I just found it so ironic of how the conversation gets spun. No, I don't have any direct exposure to Silicon Valley Bank Financial, nor does Pershing Square. End of sentence, period. Then he goes on to say, I'm personally an investor in some of the less well-known, mostly seed-stage venture and biotech funds and some early-stage startups, which may have some exposure to SVB. Collectively, my venture exposure is less than 10% of my assets. That's another way of saying that he personally stands to lose hundreds of millions of dollars, right? It's crazy. But that was who was out there arguing. And, you know, what's important to remember here is that, again, they weren't going to lose everything, okay? What were they going to get? They were probably going to get 50 cents, 60 cents, 70 cents on the dollar, something like that. I mean, the way this bank managed things with buying long-dated treasuries, if you haven't seen it, folks, okay, we all know the deal now. Their accounts, the deposits went down as they had to sell their treasuries that were long-dated. They were worth less, right? But what they did is staggering. I mean, they put almost $100 billion into 10-plus year treasuries, long-dated treasuries, at a yield of about 1.6%. And that was at peak run 2021 when their deposits went up by just, almost $100 billion. So they had to park that money somewhere. They couldn't lend it out as quickly as they could, so they parked it into treasuries. I mean, you have to consider, folks, even myself, okay? You have to consider the decision-making that a bank made like that. This is a for-profit bank, and they got wiped out, okay? So the shareholder deal, the moral hazard there, okay, they got wiped out. But to imagine a company putting $100 billion as a bank into long-dated treasuries at 1.6%, never thinking what happens if we actually need to tap those and we have supreme losses since we're buying 1% yields, and just the way it gets spun over all of this in terms of that's a lot of money that he has, and that was the voices you were hearing. You were hearing them very loudly over the weekend. But I imagine that the way the market's reacting right now, the way those other banks are reacting right now, that it goes a little bit beyond just those depositors, which is why the Fed decided to step in. I mean, they deem these banks, okay, too big to fail. That was it. Systematic. That was why they stepped in. Let me see if I can find the article on when they did. Nah, that's not the one. I think it was the Journal. I'm just trying to find the exact wording of how they, I mean, the other thing to keep in mind here, Signature, I think, is a $100 billion bank, right? They're BK as well. Yeah, we'll find out where we go from there. All right, let's jump to Morgan Stanley's Wilson. I like talking about what this guy talks about. And yeah, he's talking about selling any of the rallies that we may get, folks. Last night's rally, it was a doozy. If you sold it, how about 100 points to the downside? Investors sell any rebound in U.S. stocks that may result from the regulator's support measures after the collapse of Silicon Valley Bank, and it already may be over. Now, listen, we're going to get moves in both directions, man. But that move last night, probably irrational to what's going on. I think the Fed did what the market knew that they were going to do today, and now we're still trying to figure out whether it goes deeper. Because the money that they put up, the backstop that the Fed put up, I'll pull that information up after the next break. I must have too many articles pulled up today to talk about. Lost in a little bit of the fuzz in terms of where they are. Yeah. So he's talking about selling any rally, okay? And what he always keeps talking about is this chart right here. I keep seeing it, man. Earnings growth, right? The red line is the blended forward earnings per share, which have declined greatly since where we were basically in the middle of 2022. And meanwhile, we've just been chopping around in this market at that price point. And eventually that may catch up to that market. And boy, you want to see some crazy action, folks. That's what a spike in the VIX looks like, okay? You go back a 3-year weekly, we haven't seen anything like that type of acceleration. We didn't see anything like this VIX all of last year. And think about the year we had last year. Never did we ever have a VIX spike the way it just did. You put things on a daily, and I'm just going to zoom in on last year. Maybe the beginning of the year started that run, okay? We usually peaked out at 35 to even higher, 36, 37. We're sitting at 30, but you just went from 18 and change to 30 and change in 2.5 days. And we didn't even do that at the beginning of the year. So I'm not sure things are contained. The VIX isn't saying things are contained, and the market is certainly not saying that things are contained right now. We jump over to the SPY. SPY trading at 381. I mean, the move's we just traded down from what? March 6th, last week, you were at 407, 26 S&P points. Yeah, and I would not wait to get my money out, folks. If you have $250,000 in any bank that might be deemed not systematic, and I don't think they're going to let them fail. I think they're going to step in, but you never know how big it's going to get, man. And that's the key here, is you never know how big it's going to get. Which is interesting to say the least, as this market's just not stopping. Gold up $40 now at 1906. Notes and bonds continuing to push higher. We put it on a 5-minute chart. We're at 115.03. Yeah, you're up another 13 ticks just from the pullback you had as I began the program at 9:05 a.m. this morning. We jump over to the dollar index, DXY. 104 and change. It's pretty remarkable that, and I'm using that word a lot, but it is, man. You don't get markets like this often, folks. We still have inflation, man. And if we have a banking crisis and we have a Fed skittish to raise rates for the bank, what's going to happen to the battle with inflation? That's going to weigh on equities as well. Stay tuned, folks.
You
We'll be
might
right back.
think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and things are not really stopping right now. We've had some two-way price action, but we're right back at the session lows, man. You catch a bid from 845, we're at 38.40, we'll call it 38.39.25. You traded all the way up at the beginning of my program, folks, to 38.75. That's almost a 1% pop, and boom, just like that, you give it back. You got markets near session lows with the S&P off 1.3% right now. And yeah, talking about what the Fed came in with last night, they came in with guaranteeing the deposits of Silicon Valley Bank, guaranteeing the deposits of Signature, taking them over as well. And they also created a new backstop, shielding banks from $300 billion of losses, as the headline says here. Now, a new bank term funding program that offers one-year loans to banks under easier terms than it typically provides. $25 billion is available. Relaxed terms for lending through its discount window, its main direct lending facility. Let's see if this pulls it up right away. I believe it does. Yeah, it does. There it is. So $25 billion from the Exchange Stabilization Fund as a backstop. The only thing I'll say here is that these numbers, folks, $25 billion is not much money when you think about the fact that Silicon Valley Bank had $42 billion of withdrawals last Thursday alone, just to illustrate how quickly things can cycle. And I think that's why you're seeing a run on the other banks that we're talking about today, like First Republic down 67%, like PacWest down 45%. Watch out, man. All right. We all know what's going on in the market, man. We're going to find out today. It's a dicey one. And on top of that, what if we get a hot CPI print tomorrow, man? That was the whole rage. What if we get a hot CPI print tomorrow on top of everything else going on? Be careful in this market, folks. We're still, for some context here, okay? What are we? We're still 10% off of the lows of 3,500 for context of how bad things could get. And you don't want to sound the alarm, but man, you better believe it. Yeah, my dad's talking about Wall. And which one's that? Western what? What is that? I should know. Western Alliance Bancorp. Down 37%. Market cap of $1.3 billion as of right now. And there's a drop off for you from 80 and change. Okay, all right, let's talk a little bit something else for a moment while we step away before we jump back. You got Microsoft shares down 1% right now. And Microsoft, you talk about AI, of course, their gigantic investment in ChatGPT to the tune of $10 billion. This article from Bloomberg Technology. When's it dated? Yeah, this morning, 9 o'clock in the morning, talking about the computer that they're trying to build to power this thing. Now, when they invested $1 billion in OpenAI in 2019, it agreed to build a massive cutting-edge supercomputer for the AI research startup. The only problem was they didn't have anything like what they needed, and they weren't totally sure that they could build something that big in their cloud service without breaking Azure, which is just wild to think about. But check out some of the numbers they talk about. And this is where, man, you see these types of statistics, these types of numbers, the power behind these AI computing bots, this AI in general. I mean, things like since GPT introduced us to all of us to the powers of it, but really things seem like they're ramping up over and over, man. If you listen to Ken Griffin talking about it, Jamie Dimon talking about it recently, game changing, period. Now, OpenAI needed access to powerful cloud computing. Not surprising there, but check out the numbers, man. To meet the challenge, Microsoft had to find ways to string together tens of thousands of NVIDIA's A100 graphic chips, the workhorse for training AI models, tens of thousands of those chips, and change how it positions servers on racks to prevent power outages. These are the physical barriers they're dealing with of just assembling the computer that can run this thing because it has so much power and it works off so much data. Scott Guthrie, Microsoft Executive Vice President, who oversees cloud and AI, wouldn't give specific costs of the project, but said it's probably larger than several $100 million. That's just for the computer to run the AI. We built the system architecture that could operate and be reliable at a very large scale. That's what resulted in ChatGPT being possible. That's the manager of Azure AI infrastructure. I mean, how do you catch up once this happens, right? The company that leaps here, just thinking big picture, is going to be pretty remarkable with how you catch up in terms of where you need to be. There's only going to be a few companies that can really compete, and that's why you're seeing to the tune of $10 billion. When you think about, you need hundreds of millions of dollars just for a computer to run the product, and they're investing $10 billion in there. Yeah, I would just be quick with the market this morning, folks, because no matter what happens, we got a CPI number tomorrow, and that could spook the market as well. I mean, we're going to get two-way moves in this market. Look at already. Let's put it back to a 1-minute chart to see the moves. Look at that pop we just got. You just popped 15 points in the S&P in 60 seconds, man. The upper boundary line so far this morning as of 9:15, I'm talking about in the last hour or two, 38.75. You were at the area at about 8:30 at about 38.83. Now, an ideal, and I don't know if you're going to get it, man. You almost got it last night. Let's just put this on the hourly. Yeah, okay, so this is the larger picture where I explained it pulled back from the 618, pulled back to the 618, and that's where the run started last week. But if you're looking a little bit shorter term, okay, you go back to where the run really started last week on Monday. And if you're looking at that price point, and if you're looking where we were as of Friday, you made it all the way to the 50% overnight. But boy, you ever get back to 39.90 or 4,000, that would be a sweet spot, man. That would be a 618 of last week's move. That would bring you where you were from Tuesday to Thursday. It would bring you to 4,000, a nice round number. That's 125 points. I was hoping. I went to bed last night and said, man, we get up to 39.90 or 4,000. That would be a sweet sell point. I mean, we were up at 10 o'clock last night, folks, all the way to 39.60 already. Yeah, that's almost 90 points above where we're trading at. But look at this market, man. Look at this market charging higher. Maybe they'll say in the den. Did something else just come out in the den, possibly? Yeah. Quite the move, man. But I imagine that's how it's going to be today. The Dow just got positive for a moment. Let's check back to notes and bonds, man. Yeah, we give it up a bit. I mean, we were just at 115.03, right? Back to a 1-minute chart just to see some of these moves we're getting, man. At 9:42, 7 minutes ago, we were solid 14 ticks higher. Maybe the market digesting things just a bit. NASDAQ 100 goes positive. We got the S&Ps only negative by 19. I mean, you got Fibonacci's everywhere. That's your 5-minute chart, folks. Back to the 15-minute. So, yeah, you get up to 3,900, 4,000. That'd be a sweet entry on the short side. I don't think you get that run today. I don't. I think you're seeing just very volatile markets right now with a lot of uncertainty out there. And you got to keep in mind that we got uncertainty coming tomorrow morning, man. I don't know how this market digests a hot CPI if we get one tomorrow. And you have to realize the risks in this market, man. Last week, we had a $200 billion bank collapse. We've only had one bigger bank collapse ever in the history of this country. And Signature Bank's just lost in the shuffle. And they're like a $100 billion bank. Difficult to overstate what's going on. But guess what, man? We got volatility in spades, as they'd say. VIX, pairing markets to 27.86 right now. We got a flat market. Ho-hum, folks. S&P's down by 10. NASDAQ 100 up by 21. The Dow positive by 51. One more segment. Stay tuned, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P's negative by 15. NASDAQ barely in the positive, with the Dow and the Russell, though, getting hammered. Down by 28 points. That's 1.6% for the Russell right now. Bitcoin, strong territory, up $2,600. You got gold continuing to climb higher. Gold up $42 at $19.08 right now. And we jump to notes and bonds. Some huge price action. But, boy, it's important to consider where we were, man. And this is the price action in terms of the year 2020. The year 2021, I mean, imagine piling in the amount of money that these banks piled into treasuries at 135, and meanwhile, there's a run on the bank, and those treasuries can only net you 109, 112. You piled in at 135, people want their money back, and you're selling at 112. It varies beyond that, okay? They all just don't own 10-year treasuries, but boy, it's one of the most liquid products with no credit risk. And this is one of the factors that is factored in. I mean, regulators didn't envision this type of scenario, and they should have. If you're a regulator and this is your job, you probably could have seen this one with the writing on the wall. But what they didn't envision was this type of rate risk. Okay, there's credit risk and there's rate risk. This is a much different debacle than in 2008 when these banks held securities, mortgage-backed securities that were worthless because nobody was going to pay them back. That's credit risk. It's much more substantial. Rate risk, the money is there. It's going to get paid back. But what you did is you locked yourself in at 1%, and now inflation's raging, and yields have risen to 4 to 5%, and you can't get your money back. Well, you're seeing it play out, right? What's going to happen? They're going to take these treasuries, they're going to put them on their books, they're going to get that capital back in time from the U.S. government, et cetera. Different story. But point being, folks, quite a run we've had today to 114. But look where we were, and be fast in this market with some fast fingers, man, because I imagine we're going to get moves in both directions. And don't forget, we get CPI tomorrow, man. Wall Street has no idea what's going to happen a week from Wednesday when we get a Federal Reserve meeting. Is that going to be a spicy Wednesday? March 22nd, put it on your calendar, and put tomorrow morning at 8:30 on your calendar as well. Can't wait to see you back here at 9 in the morning tomorrow. Stay tuned, folks. Live programming all day. It's going to be a great Monday, man. Basil's up next. Steve Rhodes, Fast Market. Larry Pesavento, Dave White, Tom O'Brien, my dad, back from 3 till 4. Stay tuned, folks. Have a great Monday.